The cautious is kind of what I get on the message of your earnings here in the first half. Are you still bearish on the Hong Kong retail market? Are you seeing any signs that there could be some improvement in the second half?
Well, look, I think we're still seeing softness in specifically luxury in retail in Hong Kong. We've seen it for a while now. We saw it coming, we've reacted, and taking Pacific Place, for example, we're making a lot of great changes which are designed to deal with that softness.
What are the biggest headwinds, though? Is it continuing to see that this drop in mainland visitors? Is it the fact that luxury sales are just continuing to dwindle? I mean, what is the biggest thing that you see as a risk?
I think the mainland drop in visitation and the strong dollar is obviously the two big factors that are causing this. But, we're very optimistic about the future of Hong Kong retail for the medium and long term.
Okay, I know one strategy that you've deployed for about a year and a half now, of course, is changing your tenant mix, particularly in Pacific Place. Has this proven to be successful now that we're a year and a half in? I was really sad to see Dan Ryan's go, by the way, but has it changed? Has there been any positive effect when it comes to foot traffic?
I mean, that's the key thing, Yvonne. I think it's about change, and consumers' tastes change, things change in retail, and it's about responding to those changes. So, it's still work in progress. There's a lot of really cool things happening at Pacific Place. We're excited about that. I would say stay tuned.
Okay, I know you've really kind of changed in terms of F&B, how things are, in the mix of all these things. But, we still see sales at Pacific Place and Admiralty, your Citygate outlets in Tongcheng, still seeing some double-digit declines when it comes to sales in the first half. Do you think this is going to continue?
Well, we think that the changes that we've put in place are absolutely designed to get footfall back. We're watching that happen. It takes time in the retail business, in shopping centres. We've got leases to manage, but I think some of the things that are going on right now give me great grounds for optimism for certainly the medium and long term.
Yeah, and let's talk about the office, of course. You described the outlook for your office leasing to be subdued in the second half, and you've been able to raise your rent for some of your leases, of course, these new leases coming online. You also spent about $2 billion on this redevelopment in Taikoo Place and Quarry Bay. Do you think this is going to be enough to offset what we see in retail?
Sure. Well, the office is a huge part of our business, and we say subdued, but there still is demand in Hong Kong. We're pretty close to fully occupied in both Taikoo Place and Pacific Place, so things are looking fairly solid on the office front. Of course, the commitment and the investment in Taikoo Place is a huge story for us, and it's something that we're really excited about. The landscape, design, the connectivity and everything has really threatened to sort of take Taikoo Place to a new level of CBD office, and so we're pretty comfortable with the way it's all heading.
Talking about the office space or office market in Hong Kong, you're seeing subdued in the second half. Does that translate, or is that a similar story in China that we're seeing right now?
I think China has different situations in different markets. In Guangzhou, we're pretty much fully occupied again, and we've managed to maintain that position for quite a while. Beijing looks a little bit softer on the office front, just in terms of the new supply coming on, but we're relatively well positioned in both markets.
Okay, Guy, I want to throw you a soundbite right now. We spoke to Zhang Xing, the Soho China CEO, yesterday. She was talking about one of their strategies now is selling non-core assets just to try to generate a little bit of cash, possibly give it out as dividends to investors. But I want to take a listen and see what you have to say.
We're just taking advantage of the current market, which is a lot of insurance companies, a lot of institutions have a lot of cash, and they're all searching for yielding buildings, and there were so few yielding buildings on the market for sale. Now, we happen to have the largest portfolio of office buildings in Beijing, in Shanghai. They are red hot. If we don't see better opportunity to invest, then we will just pay special dividends.
She's talking about this hot market right now. They got to take advantage of these insurance companies trying to come in with plenty of cash to come into the market. But she says deploying this asset light kind of strategy is working for them. Do you see that for Swire?
Well, that's great. I mean, I think every developer has slightly different views on how they want to approach the market. We're in Swire Properties, we're in China for the long term, and we take a sort of long-term hold position on some of the quality assets that we've got. We're very excited about what we've created so far. We've got 4 investments that are up and running, and later in the year we're starting to open our latest, our 5th investment in Shanghai, which is HKRI Taikoo Hui. So we're pretty pleased with what we're doing in China. and there's a lot of good things still to come, I think, from Swire Properties.
Yeah, given just the intense competition that we do see in Hong Kong as well as in China, I mean, what has been Swire's strategy when it comes to looking further afield? I know in the U.S. You have just been talking about your Reach and Rise apartment complexes. That's scheduled for turnover this year. Is the U.S. and even Singapore going to be more of an earnings driver now?
Well, I think this year and next, the US has been a real big part of the Swire Properties game. We've been in Miami for a long time, of course. This isn't this isn't a new story for Swire Properties, but certainly Brickell City Centre is threatening to transform the downtown scene in Miami, and we're really excited about that.